Hi, I'm Mike from MrBounceback.com, and today I'm joined by Stephen Pegg from UK Finance and Patrick McGee from the British Business Bank. Okay, guys, thanks for joining me today.
Pleasure.
Okay, I've got all manner of questions, but before I start about the current state of play with bounce back loans, if you cast your minds back to prior of this scheme launching on the 4th of May 2020, what was it like? Patrick, in the few days, you didn't have long to set the scheme up, so what was it like?
No, if you go back to that time, it will be an incredible time we'll all remember, because we were, the society had been locked down. We'd launched the CBILS scheme, but there was still a significant outcry for government and the banks to do more to protect British businesses. So, this is all laid out in the various reports that have been issued, but it was towards the end of April, about 22nd of April, I think, when we were asked to launch the scheme, and we were trying to get it up and launched for the 4th of May. So an incredible period of time. When there was a significant outcry. I attended various parliamentary committees, and the finance just wasn't flowing quickly enough. Businesses were shutting down, they were losing revenue. There was fears that hundreds of thousands of businesses would cease to trade, and there was really an important job to do to stand up the scheme. And government designed the scheme to provide flexible, low-cost finance to businesses with the aim of saving them from going under in the midst of the pandemic. And this really was an emergency situation, and there was a real need to act swiftly. So, I spoke many, many times to Stephen and, the banks that stood up the scheme. We had calls right through the 2 weekends to launch the schemes. We worked round the clock. We're designing a completely new product. Very low-cost finance with, terms that were favourable towards the SME. There were, dozens of people here at British Business Bank, and probably hundreds, if not thousands, across the banking industry who were rallying to the call to save small business across the UK. So it's something I'll always forget and never forget and always be proud of.
So I remember on the morning of the 4th of May, the first lender made the system live at about 8:30 in the morning. And then another one went live at 9 o'clock, and then one at about 8:30, then 10 o'clock, and then through the day they all went live. So, Steve, you represent 28 of the bounce back loan lenders. Was it a similar story with you guys in them early days pre-launch?
Yes, I mean, if you remember, the launch of CBILS was literally on the day of the first lockdown. Yeah. And, there was only really the weekend where we finally had the details being worked out to launch that. So that was intense. And then clearly the period of delivering that was very busy. But what I remember is that collaboration that Patrick was talking about, where so many people had to work together. Eventually, over 100 lenders were accredited for CBILS, and as you say, 28 or so for bounce back loans, many of which were our members. So coordinating everybody was a very intense period, and I think everybody was very conscious that this was an unprecedented situation where effectively the economy for large parts of the market had stopped, and the volume of requests and the speed with which money was required was completely unprecedented. And because of that, we had to do some very unusual things. Quite difficult to know with that uncertainty as to how you would judge affordability and the viability of those businesses, but ways and means were developed, and that launch was done in a very short period of time. I think that experience for me of nearly 40 years in the industry was probably the highest pressure situation I'd ever experienced, but one I think which was very important. And I think the latest evidence is that that really did save a lot of jobs and help many people get through the situation.
Okay, so I often hear the word reservation letter, Patrick, just before the launch of the scheme. So what was the reservation letter and what was its purpose?
Sure. So the British Business Bank is owned by government. We have an independent board and we have an arm's length body. So within our governance structure, if we have concerns about whether or not, we can make the scheme work or there may be risks for government, it's an obligation upon us to put those reservations down so the ministers can make an informed decision. There were three principal concerns that we had. In government speak, it's propriety, which is basically the risk of fraud, because basically we were concerned that a lot of this would be done on a self-accreditation basis. Now, we did work with the banks to put in the fraud, AML and KYC, so that mitigated to a certain degree, but there was still going to be a high residual fraud risk, and there's been lots said and written about fraud. So, that one was a concern. The second one was about value for money. We knew that billions of pounds were going to go out into the economy. How much of that would go back? So again, you've got the benefits, which are the jobs and the businesses saved. Stephen was just talking about the evaluation survey. We reckon that we've saved somewhere between 150 and 500,000 businesses, which could be 500,000 to 3 million jobs. Now, obviously, the upper end, that's a very significant input. So, we were concerned about, we wanted to deliver those benefits, but again, the costs would be what the losses would be over time, particularly for fraud. So we flagged the value for money for risk, but given that evidence we've seen now, there's looking to be really positive benefits for the economy, but it was right for us to raise that reservation at the time. And the third one, and it was a real concern, was feasibility. Could the 28 lenders stand this up? Would those systems crash on the 4th, 5th, 6th of May, and then people be really frustrated? And rather than coming to the aid of businesses, we would end up. So, but we had to go very quickly. Okay, we've got 11 days to launch this. What are the risks minister should be concerned about? Having flagged those risks, what the team here did, working with the lenders, was to spend every hour of every day mitigating those risks. So we raised those concerns, but once we raised them, we wanted to mitigate them, and I think we're making good progress in mitigating those over time. Okay.
Now, the scheme is a delegated scheme. Again, what does that mean?
So again, it's, the bank is, only 8 years old. I've been working on setting it up over the last 10. And one of the fundamental things that we think, it's always more efficient if we can work with the industry and get banks or fund managers to make the investment decisions and make the loan. If I was asked to set up a scheme, the government would make 1.6 million lending decisions in a couple of months. No magic wand would help me deliver that, but working with the 28 banks, we managed to get them to work through that. So when we say delegated scheme, we will sit in the background, we provide a guarantee. And it's important to remember here, this is not government money that's gone out, it's the bank's money that's gone out. We then provide a set of rules that they comply with. And if there is a loss and they've complied with that, then government will step in. So, we're asking them to do the lending, to put their money at risk, but then, we're standing behind to pick up those losses. So it's delegated in that they make the investment decisions, they monitor the scheme, and then we look as to whether or not they've complied with the rules of the scheme.
Okay, so if we fast forward to now that the applications have ceased and top-ups are no longer available, what is the British Business Bank's ongoing role with bounce back loans?
Sure. Thankfully, it's not quite as frantic as it was in those early 11 days, but it's still extremely busy. I suppose the job one is to administer the scheme, and if you can imagine, there's 1.6 million loans were issued. We collect 70 data points on those, and those are always changing. So there's a huge amount of data to gather and administer the scheme. Then we need to work with the lenders to make sure that people know how the scheme works. And that's why we're keen to work with you today, just to help explain what pay-as-you-grow options are. Because again, pay-as-you-grow was something that we introduced with government in September 2020. And there, again, we can talk a little bit more about those. But uptake of those has been really good. So the original 6-year loans can be extended to 10-year loans. People can have interest-free periods. They can, if they're struggling, ask for a capital and interest-free period. So I think it's very important to get that information out, hence working with you today. We're really keen to make sure that businesses are treated fairly. Obviously, banks are regulated, and the FCA took an interest in the scheme and were involved in the setup, but we're keen to make sure that businesses are treated fairly. But the thing is, as I was saying there, government money is at risk here. Government has accepted those risks of those losses. And if a business fails, legitimately having tried hard, that's a credit loss that government, has accepted. I don't think any of us were keen or in any way tolerant of fraud. And therefore, we work very closely with the banks. And there's been some of the biggest data sharing exercises in UK government history between us and the lenders, sharing fraud flags and information, so the banks follow up on that. So we've a very important job to do there to work with the lenders to manage down that risk, because I don't think anyone's going to say that fraud on taxpayer money is a good thing. So we're very committed to doing that. And then the final thing we do is we monitor the lenders. So we work with them. We do a series of audits. So each bounce back lender has been audited twice now. We work with them around recovery principles. We look at the claims that are coming in. So if you can imagine, this is a very significant product that 2 years ago, a little over 2 years ago, didn't exist. So we have built the team here, built the systems, the processes, and working with the lenders. And it's something that the bank and the team that have done it are extremely proud of, because I think as that evidence shows, we've probably saved between 150 and 500,000 businesses.
Okay, now something what has come to light just now. There's people demanding for public scrutiny that you provide the names of businesses and business owners who have got bounce back loans. But you, quite rightly in my opinion, have been putting up as a spirited argument for not doing so. So can you enlighten me what are the reasons you've given not to name everybody with a bounce back loan? And why is it an organisation wants them named?
Again, we've seen the arguments, and the first thing I'll say, and my legal colleagues will say, that's a subject of an ongoing procedure through the Information Commission Officer and tribunals. Have to be quite careful on what I can say. But what I can say is those names are commercially sensitive, so it would be the customers of different lenders. And I think individual borrowers' interests are at risk here. I can see that if I were a bounce back loan, would I want my name? That I'm a plumber from Northern Ireland, or a restaurant here in London. Do I want that information out there? I think there's also, as I explained in one of the committees, there's a risk of what I would call social engineering. Of course, the banks and their agents are making appropriate efforts to recover those loans, but people could try and pretend to be collecting the loans, put pressure on businesses. So I think I'm very supportive of the bank's position not to disclose those names, because they are confidential. I think there could be borrower harm caused, and that's why we're going through the process to work through that and not disclose those names. Now, some of the larger company names have been disclosed because of state aid requirements, but for the individual borrowers, I think they would support us, and thanks for your support in that.
Okay, Stephen, what is the industries, because you represent 28 of the bounce back loan lenders, what are their collective thoughts on naming everybody with a bounce back loan? Did they follow what Patrick just said?
I mean, you can understand the interest in transparency, particularly when government's money is put at risk. But I think, as Patrick has said, I'm always thoughtful of the impact on customers in the end. And I speak to a lot of the business groups, the Federation of Small Business, for instance, and I think they're quite concerned not just with the risks, but actually whether it's appropriate for a sole trader who's operating in their own name, running a small business, who borrowed under normal circumstances and would not have expected that information to be public, perhaps compromising their commercial interests, providing information to competitors, or putting people at risk to have that in the public domain. So, whilst if that were a requirement, of course the banks would have to cooperate with that. I mean, I very much take the view of the small business groups that there's not a strong justification for it.
Do we know when the tribunal is?
I think that's, there's a couple of different cases that have been brought together, so I think it's going to move back to late this year, possibly even into next year. So it's going to be an ongoing thing. But as I say, it's legal proceedings, so I probably can't comment further on it.
Okay, there's a lot of discussion about abuse of the bounce back loan scheme. I know that has been addressed and investigated. However, the British Business Bank has agreed procedures that banks must follow regarding arrears, defaults and even forbearance. You've made fair treatment of those with a bounce back loan the heart of that procedure, and if a lender does not follow it and doesn't play fair, they risk losing the government guarantee. So let's move on to that. Now, in fact, let's start with the pay-as-you-grow options, because believe it or not, Patrick, I am still being told by a small number of people, admittedly, that they've no idea what the pay-as-you-grow options are. So can one of you guys just briefly touch on that?
Yes, I mean, pay-as-you-grow encompasses some quite generous opportunities to kind of get a bit of help or additional time really to repay your loan, whether it's by extending the term, as Patrick was outlining, just paying interest for a period of time, in fact, 3 separate periods, or having an additional 6 months with no interest in capital to repay. I've heard the same, actually, that 1 or 2 people still haven't heard about it, despite the communications that have gone out. And I know that a number of lenders are now, doing some further communications about that, because you can take it any time during the period of the loan. Of course, that in itself may still not be enough, and that doesn't mean to say that you can't talk to your lender about other help, signposting to support and discussions. There may be a need to restructure your loan arrangements. And whilst most customers have taken a bounce back loan and it's the first loan and the only loan that they've got, others will have other borrowing requirements, and lenders are quite keen to look at the customer as a whole.
Yeah.
And try and make sure those arrangements are sufficient. But certainly pay as you grow has worked well. It's been popular. Probably the most popular option has actually been to extend the term rather than have a full break. So, that's showing that people are keen to continue to make some kind of repayments and not entirely put things off. But where they've needed it, I think it's made a real difference. And those who finished their pay as you grow option are now, most of those are actually now making repayments. So it's worked, in that sense.
Okay, well, you touched on it then. If the pay-as-you-go options are not deemed enough to help someone, additional and tailored forbearance options could be offered by a bounce-back loan lender in line with their own in-house procedures. That could include a payment plan to resolve arrears, more time to seek advice on options, and waiving interest accrued on the loan in some cases. If such forbearance is offered and taken, will that reflect on somebody's credit file?
Yeah, so it's normal practice to offer that sort of help and support. Sometimes it's actually guidance that people need, referral to a business debt line. And I think you've talked about that on previous videos that you've done. Because the bounce back loan scheme is such a standard one, the pay as you grow options are the ones that probably are the first port of call for that additional help. But that, as you say, doesn't mean to say that other forms of support might be made available, even during that period where you're talking about collections and trying to recover the funds themselves. In fact, that's often one of the most useful tools to customers, to talk about a repayment plan. Asking people, what can you afford to repay, so that they've got the opportunity at least to make some progress.
But if somebody took any of the pay-as-you-grow options, not the additional tailored ones, that won't show up on any of the credit.
Yeah, and that was the thing I really wanted to emphasise, because it was one of the things that in our discussions with colleagues across government with banks, we could see, and when we introduced this in September 2020, the path out of the pandemic wasn't clear. So one of the things that we discussed with the industry was that if someone does take one of the pay-as-you-grow options, whether it's extending, whether it's taking an interest-only period, that doesn't have a negative impact on the credit file. I think that's really, really important, because a lot of bounce-back borrowers, they haven't borrowed before. My father was a small businessman. He didn't borrow. He was very proud of that, but I'm sure he would have taken one out had he been around and in business. So from that point of view, it's really, really important to get the message out that the pay-as-you-grow options do not have a negative impact on your credit file. And I think that message must have got out, because we're getting into north of 20% of borrowers have taken those options, and I think they are very good tools.
Just to add that pay-as-you-grow is effectively a bit of flexibility within the product itself. It's not something which is only offered where customers are in particular financial difficulty, or the lender has any say over. Customers can just apply for that additional flexibility. So it's quite right that it's not regarded as in the nature of a default. Now, it might be that on somebody's credit file, it's visible that the term of the loan has changed. But that's not necessarily a negative thing. In some ways, of course, the fact that a credit reference agency sees that somebody's got a loan and made repayments of a loan can be a positive thing for people's credit record. It's often the case, isn't it, as consumers that, not having borrowed or paid rent and so on makes it more difficult to borrow than having successfully repaid it. So, I think people should feel confident in taking pay as you grow, just as Patrick has said.
I think it's also important to say that, generally in the lifetime of the bank, SME lending has been in that £60 billion a year, 55 to £60 billion a year. During 2020, SME lending went up over 100 billion. And actually, as a result, SMEs have gone through the pandemic with greater levels of cash on their balance sheet and are probably stronger as a result. And some research we published in February last year showed that the health of SME balance sheets are stronger as a result of this. So that money has been injected in. I think a lot of people took these loans as a almost uncertainty insurance. They didn't know what was going to happen. They took the cash, they put it in their balance sheet. It was interest free for a year, and 2.5% for a 6 and maybe even 10-year loan is good value for money for the businesses. So I think small businesses really have benefited from it, and that's why the bank has been proud to administer that and proud to work with the banks to do that. Now, obviously, when people are struggling, they'll be nervous, and that's why we want to get the message out that pay-as-you-grow options do not have a negative impact. As you said, they can improve your standing, because if you make those payments, people will regard you as someone who is conscientious and is doing everything they can to pay back.
Okay, if somebody does start to miss payments though on the bounce back loan, is that going to be reported to credit rating agencies? As I'm led to believe that after 3 missed payments, it will lead to a formal demand for full repayment of the bounce back loan. Is that correct? And what is expected from a borrower and lender at that stage?
Yeah, well, that does then, like in any loan, if you do start to miss the payment. So that's why we'd always encourage people to go and speak to the lenders, make maximum use of those pay-as-you-go options. But then if you do start missing payments, you are beginning to get into arrears and moving towards default. Again, because this is a delegated scheme, we've said to the lenders they can should work in terms of their normal recovery practices. Most people after 90 days will start moving towards, looking for recovery and putting demands in place. Although I should emphasize some lenders, have a shorter working term, working capital type product are shorter than that. But generally it's 90 days. Then you move to demand, and then, the borrowers need to respond to that demand and hopefully find a way to recover.
Okay, am I correct in saying that bounce back loan lenders can optionally choose to use debt collection agencies to recover outstanding amounts owed, but cannot perform doorstep visits? And the intent is that there are no cross defaults. If so, can you explain just what that means?
Shall I start with that one? So
sure.
Many finance providers use debt collection agents for their normal practice. Now, the responsibility is still on the lender, and effectively those debt collection agents are working as agents for the lender and talking to the customers and trying to find ways in which that situation might be resolved. Of course, because bounce back loans were delivered in such volume, even some finance providers who weren't using them before have considered using them to supplement their resources effectively, so they're able to deal with that number of customers and deal with them well. We spent quite a lot of time as UK Finance with members just working through good practice in dealing with debt collection agents, even considered whether that might be done centrally at one point in time. Now, we didn't go down that route, and individual finance providers take their own approach to it. But we did develop some guidelines, good practice, and we spoke to British Business Bank and the government about that, and indeed the Financial Conduct Authority, to make sure everybody was comfortable with the ways in which they'd operate. And that absolutely doesn't involve doorstepping customers or whatever. There's a commitment anyway to treat customers empathetically, try and provide that supportive approach, and that's very much been the guidance that's been given to working with DCAs. Most lenders then will undertake a review of that work and just make sure that there's proper assurance that customers are being dealt with in the right way. But it can provide more resource so that people aren't sitting on the end of a phone waiting for a call to be answered. You've got the right number of people there to support them.
So if someone has missed 3 repayments and has received a formal demand for repayment, there is still the ability for them to negotiate a repayment plan?
Absolutely. So formal demand effectively is a legal step with a facility that might lead to further discussions and action. But it certainly, very often will involve a discussion about a repayment plan. What might it be possible for you to afford to repay? And the conversation will consider people's other outgoings and realistic repayment terms so that they're able to negotiate something that's reasonable for them, perhaps for a period of time until that business gets back on its feet. So it's not always the end of the story. But, as Patrick was identifying, after 3 missed repayments, it does represent a kind of start of what we call the collections or recoveries process.
I have heard from some borrowers who have got to that stage and have been able to negotiate a repayment plan. Basically, some of the lenders send out an income outgoing type form. Is that how it's worked out? And then whatever is affordable is affordable?
That kind of income and expenditure assessment is very much a responsibility on the lender to make sure whatever's agreed is realistic and affordable. So that's a commitment that everybody's got, and I think is sometimes quite helpful, because people may have multiple liabilities, and it's only by looking at the customer's circumstances as a whole that you can come up with something that's realistic.
Maybe I'll just add some of the government perspective. And again, that work in terms of collections and recoveries was not something we did in the first 11 days. It was, once we were getting through the initial interest-free period. From the government's perspective, we absolutely heard from the lenders, we're looking like we're going to have 1.5 million borrowers. Many of those won't have borrowed before. If they get in trouble, we won't necessarily have the in-house resources. So we agreed that, using external debt collection agencies, but we were very keen that people weren't doorstep. And again, the whole principle of the SCA regulation is to treat customers fairly, work out what's coming in, what's going out, and agree a plan to do that. So, step one here is to make maximum use of the pay-as-you-grow options, and then if you're still struggling, have a conversation with the bank and try to get a repayment plan, because again, that will help your business survive, will minimise losses in the scheme, and then be good for both SMEs and the taxpayer.
Mike, there's 3 things I suppose banks and finance providers are focusing on. One is treating customers fairly. 2 is actually doing the right thing really for the taxpayer, because there needs to be a minimisation of losses insofar as that's going to be possible, and the third is making sure that it's compliant with the rules of the scheme, any regulations that apply, and so on. So balancing those 3 things is very important in all this.
Let's move on to enforcement. When written into the rules, Patrick, I saw that the banks will only start enforcing the debts if they suspect organised fraud or the borrower is refusing to pay but has assets.
So the way I would think about this, so again, one of the thinking process we went through within government and put into these principles we agreed with the lenders in UK Finance was that we generally don't expect lenders to take enforcement action and pushing for insolvency just if someone's missed their bounce back loan payments. Again, if there's a wider issue or if there's fraud or willful misbehavior in terms of trying to avoid repayment, then it can. But the starting position is if someone's struggling for the bounce back loan, we don't expect the lenders to move in and do enforcement.
Right, am I correct in also saying that if it's discovered that a lender has not followed procedure when issuing bounce back loans, or they've made mistakes and errors, you guys can actually pull their guarantee?
That is true. Unfortunately, we're not having in those difficult discussions with lenders saying we'll yank the guarantee. What we're actually saying is lenders going through and we're auditing them. They're auditing their own books for their own internal governance purposes. And we have had, in quite a number of cases, I don't have the current figure, but it's certainly in the tens of millions of pounds and growing, where they say, well, actually, that was an ineligible loan or there was a failing in our procedure, and then they're withdrawing the guarantee. Now, there still may be a relationship with the customer there, but the government is no longer liable for any losses there because the bank has stepped outside and given a loan that was.
So some of the lenders are actually self-reporting, if you like, that they've made an error.
And it's a very collaborative discussion. We are quietly challenging them through the audit processes, etc. But if we're finding a failing in their procedures or if they haven't applied the fraud processes appropriately, or they've taken a misstep in determining eligibility, they will withdraw.
So where would that leave a borrower who's got a bounce back loan that hasn't got its guarantee? Are they informed that, look, your bounce back loans had its guarantee, the actual borrower, are they informed, or?
I think that's more of a matter between us and the lender, because again, the loan could be valid between, it would remain valid between the bank and the borrower, and they would work through there. So it's the banker voluntarily giving up their cover on that loan. It doesn't mean that the loan, therefore, is unenforceable, or is the borrower needs to be informed about that. That's a matter between us and the lender.
Okay, if somebody feels that they're not being treated fairly by a bounce back loan lender at this stage of the game, who should they complain to if they've tried getting the complaint addressed by the lender and they've not had any joy?
Stephen, you might want to come in this, but first step is to go through the bank's process and then to go to the Financial Ombudsman Service, otherwise known as FOS.
Yeah, so as Patrick says, the Financial Ombudsman Service provides that kind of independent backup if a dispute with a bank gets to a point of deadlock where effectively you haven't been able to resolve the dispute, and after a period of time, that independent financial conduct authority supervised agency can step in and look at the case, make a judgment on it, and decide if it's in the customer's favour that some recompense might be due. So, but the first step is absolutely to talk to the lender about it. And in most cases, probably 99% of cases, things can be resolved at that level. That feedback of complaints, if people feel that they're not being treated as they should be, and there is a requirement not just on the basis of the scheme, but the overall regulations of banks require customers to be treated well, is very important for improving the service that banks provide. But 1.5 million loans have been provided, so sometimes things are going to go wrong, and it's important that those are followed through on.
Okay, Patrick, I know you're a facts and figures man. So currently, I'm going to put you on the spot now. What are the figures on arrears?
So we haven't published new figures. We're in the process of getting those out as we film this. They may well be out soon. But in terms of arrears, as of September, we're aiming to do them every half year. So September and March figures, but obviously it takes time to gather that data. So arrears were around 7% as of September. We then had 4% that were fully repaid, 2.5% that were in default. So actually, but it's still relatively early in the scheme. So arrears were certainly at the lower end of our expectations. But again, you have to think of the lifetime losses, and of course, businesses will, have to work through, inflation, cost of living, and all of those things. So it's very early days. But at the moment, arrears and defaults were in 10%. Obviously, over the last 6 months, those begun to grow. So we're getting into the double digits.
How many guarantee claims have been put in by the banks?
Again, the numbers that we've released in that, I think we've had in the north of 1.5 billion. But again, we're processing through those. So far, we've paid out a few hundred million. I think it's 300 and something million.
So when they actually put them in, there's no guarantee they're going to get paid because you then audit them and.
Well, we've got to go through and do a reconciliation process. And again, as I've alluded to here, with 1.5 million loans, 70 data points, we actually have a very detailed, I think we do 29 checks through our operating centre and then look at those. So again, we're working through those with lenders.
With the pay-as-you-go options, has a fair percentage of borrowers taken them?
Figures as of last September were getting into the 20% and it's growing.
There's a lot, wasn't there?
Yeah, but again, I think those are, as we were discussing earlier, things that are designed to help borrowers, and borrowers are looking at it and going, actually, 10-year money at 2.5%. I think a lot of people are looking at that and going, I'll take that in as a piece of capital.
Well, that would be reflected in the bounce back loans that have been paid in full. So what figure did you quote then?
What's been paid in full back, I think, was about 61,000 facilities, about 4% back then. But again, that's grown because, again, as I was saying earlier, a lot of people have cash in their balance sheet and they've had that first interest-free period. So that 4% has grown quite a bit because people have gone, actually, we've got more, more cash in the balance sheet. So rather than paying out the interest and starting to pay the capital, they just pay it all back. So we're saying, fully repaid going back. And again, that's a great sign for the scheme. People were able to take that, effectively emergency liquidity, sit on it for 12 months, was interest free, they've worked through for a quarter or two and said, actually, the business is okay now, and then they can repay that. So.
I'll just add, Mike, that if you look at all of the lending that's provided, not just government lending schemes, but other facilities, and the level of deposits that small, medium-sized businesses have, and those deposits are at record high levels. There are quite substantial. There's quite substantial headroom in people's facilities, overdrafts and invoice finance and so on, which is quite helpful at the current time because there's still a lot of uncertainty with supply chains, with cost pressures and all the rest of it. So for many businesses, it's actually been very helpful that injection of liquidity has provided a bit of room for manoeuvre just at a time when, unfortunately, even post-COVID, many businesses are still facing disruption.
And that's, if I go to the sort of fundamental purpose and objective of the British Business Bank is to make sure that the finance markets work for small businesses. And again, when the bank was set up in 2012, people were saying, our bank's lending to small businesses after the financial crisis. But because of the regulatory changes that have taken place over the last 10 years plus the work that we've done, plus these schemes, I think, the lending markets are working and capital is there. So businesses have access to capital, as Stephen was saying, have strong cash. So therefore, they're in a stronger position to work through, what have been a very difficult 2 years.
But that's not true for everybody. And in the end, you look at aggregates, and there are some people who are still close to the wire. So that's why it's so important that we do get the message out that help is available, and that organisations like Business Deadline and so on can be very helpful. Each lender would be very keen to work with those businesses, talk about alternative options, look to restructure facilities, because nobody wants to see a business which has a potentially viable future not get the support that it needs.
Okay, on the topics of fraud, you see every few weeks in the papers there'll be the big headlines, and it's like they're making figures up. What is the percentage that the lenders suspect are fraudulent bounce back loans, and what is the British Business Bank? Because I'm seeing two different figures, and then the newspapers just pull a figure out of the air which have no correspondence.
Well, I think the phrase used, suspect, is quite important, really, because there's a process of investigation when you have some triggers or warnings or potential information that there could have been some fraud or issues with that particular loan. Until those have been investigated and the evidence is sufficient to pass a threshold that's required, I think it wouldn't be fair to treat that business as a fraudster, quite rightly. So lenders have been investigating loans where they've got to that level of evidence. Then they'll register that on the British Business Bank's portal, and it's been 1.5–2% of facilities that have come to that level. But investigations are still ongoing, and the reality is things might come out over time which will put that figure a little bit higher. I would say, though, that all our expectations and experience is that most people are honest, and most of the losses that will occur with this scheme will be credit losses where people can't afford to repay rather than deliberately defrauding anybody. But this is a major scheme. There's a very large number of businesses, and unfortunately, there are sometimes circumstances where, people haven't done the right thing.
Mike, you're very observant, because this came out at one of the parliamentary committees that we discussed. What British Business Bank and BEIS had published was an estimate of possible or probable fraud and losses related to there of about 7.5%. We went through a very detailed exercise. We went through, I think it was 1,066 cases, I think it was, or 1,067, and we spotted about 80% that looked like possible or probable fraud. Now, we've been tracking those, and actually quite a number of those are actually paying, so we'll be revising that estimate, but it's a different threshold. We were looking at possible and probable fraud, 7.5%, which of the 44 billion comes out at less than 4 billion. The suspected fraud, where you've gone through and marked it as that looks like a fraudster, is 2%. So over time, the two of those will probably come in, and obviously the lower the better.
In the middle.
But again, ours are talking about fraud losses, And therefore, if you do challenge someone who say, actually, you may not have, a response maybe, no, I'll pay that off, and at least there's no loss to the banks or the taxpayer in that situation. So hopefully the 7.5 is the high water mark, suspected fraud, which has gone through the process, and it'll be many years hence when we work out what that eventually will be.
Okay, Stephen, let me ask you a question. I've heard from a great many people who are getting account reviews which can go by a different name depending on the lender. Is that part and parcel of each lender's rules or the British Business Bank rules? Or are lenders just randomly selecting accounts for reviews? These are people with bounce back loans suddenly out the blues being asked to supply all manner of questions.
Yes, I mean, I think lenders, for their own purposes, will look to try and understand customers' situations where they've had some information which requires further investigation. In some cases, information may have come from authorities or other third parties which require further information from the customer. So those account reviews are nothing necessarily to be concerned about. It's just a request for further information. If you remember when the original bounce back loans were provided, often within 24 hours, there was limited information in those circumstances. And after a period of time, to kind of look at those businesses and understand the situation as a whole is quite important. In some circumstances, that might be triggered by the fact that a business appears to be in some financial difficulty. Let's say that they're in excess of their overdrafts and you want some further information on them to understand their needs better, signpost them to the right element of help. In other circumstances, there might be, as we've just discussed, some concerns about potential fraud there. Hopefully, in a conversation with a bit more information, that can be satisfied. A typical example that I'd heard from one of the lenders was, there might have been 2 loans to the Red Lion pub. Well, there are more than one Red Lion pub in the country, so it could be entirely innocent. But we might need to look into that.
So if somebody does get one of these letters, they should just have a chat with the bank and just let them know what they. I'm going to ask you this because some people have asked me this. Some people have basically broken the rules when they applied. They took out the bounce back loan. They did something wrong applying. Afterwards, thought, Jesus, right, I've broken the rules. I could be a fraudster. And they paid it back. Is that going to be the end of the matter?
An example of that might be that in the early days, people were concerned about getting money as quickly as they might do, and they might have applied to one lender, hadn't heard, and then applied to a second one, and ended up with 2 loans. Then discovered, crikey, you're only supposed to have one of those loans, had repaid it. And in those circumstances, I think nobody would be particularly concerned about it.
Because some people, I can't remember, there was one about he's paranoid about, he's broken the rules, he's paid you back. It wasn't that much, but he's paid the lender back. But he's now worried if everybody's named on this database, somebody might say, well, hang on, his turnover wasn't that. So he's now paranoid, he's going to be done for something he's not done.
No, and
that's more reason for not
and that's very much some of the thinking we have about publishing the names. I think people it was a very difficult time. People took that emergency liquidity. If they found that they didn't need it, or they took the double loan, or they thought they needed £30,000, they're only entitled to 25,000, but they've now paid it back down and are making best efforts. I think that's understandable.
If somebody's paid off full, it'll be classed as you're not going to be digging around in people's.
There's 1.5 million loans here, and I think we'll be focusing on the suspected fraud.
Right, guys, are personal assets of any type safe if someone cannot repay the bounce back loan? And it's ultimately the lender who decides whether to take enforcement action against a business owner or company if a bounce back loan can not be repaid. So is somebody's personal assets safe?
Bounce back loans are an unsecured loan, and therefore there's no security provided for them. People are asked and still liable to make repayments, but because there's no security there, that's not applied in making that repayment. There may, however, be other borrowing that business has which is secured on a property or some assets or whatever, and action may be taken and against those particular assets. And of course, if the funds are available to repay the bounce back loan, ultimately those could be used for it. But the principle of bounce back loans they were unsecured, and I think in line with other government guaranteed schemes, the principal private residence, the main vehicle and so on was not designed to be used for the loan. But bounce back loans are not something which will lead people to be concerned about losing their home, for instance. Okay. Now there are some circumstances where, if there's been egregious fraud or misbehaviour, there is an expectation that there could be some enforcement actions against individuals, but that would be in very unusual circumstances. In normal circumstances, with somebody who's done the right thing, that wouldn't apply.
I think we can all agree the last 2 years or so have been difficult for many people. But there's much more to the British Business Bank than just bounce back loans. Can you tell me what services you offer anyone who's thinking about starting up a business or wants to expand the business? Because there's more to you than bounce back loans, isn't there, Patrick?
Absolutely. We're still a relatively young organisation, but we hopefully have achieved quite a bit in our first 8 years. So in terms of someone like that who's thinking about, borrowing or thinking about starting a business, we have an excellent finance hub on our website. You can just search British Business Bank Finance Hub. One of our programs that's had the most comments over time has been the Startup Loans program, where we help over 10,000 individuals a year to start their business. It's not just lending. It is actually, there's a business advisor who helps them through their business case, helps them through the application to make sure that they can appropriately afford that. And again, there's a degree of mentoring there provided as well, so they can point them in the right directions. And I think if you again go onto our website and look at some of the case studies, it's absolutely fantastic what that program has achieved over the years. We help well north of 80,000 businesses now, and again, some of the inclusion that brings. We have over 40% female entrepreneurs backed in that, against a 20% startup rate. Again, those from black or a minority ethnic background, again over 20%. Again, 36% of people have been unemployed. So again, we're getting finance to those who mightn't get it otherwise, and providing that business advice on the way in. So that's a program we're all very proud of. We've also recently updated our mission statement to talk about helping businesses with a sustainable growth. And we've launched a campaign called Green to Grow, where we're helping people on their journey to net zero. I think a lot of SMEs are beginning to think how they should do that, and we're helping them on their journey there. And again, we're very big players in the equity market, angel investment, early stage venture capital. So again, as I was saying earlier, the whole ethos of the bank is to make the finance markets work for small businesses. And we're incredibly proud of what we do to support businesses. We were helping businesses, about 100,000 businesses, with about 8.5 billion of finance when we come into the pandemic. We've now helped 1.5, but we've had a big scale up ourselves during the pandemic. But those core programs that we've always run, in terms of the startup loans program, the equity programs, we have asset finance programs. So we have create a diverse and vibrant finance market for small businesses. And as again, it's part of that mission to make the UK a great place to start and grow a business and to bring economic prosperity. And again, if you speak, as I know you do, to small businesses, a lot of people are never happier than following their dreams and starting their own business and being their own boss. So that's really what the BBB is here to do. So thanks for allowing us to speak a little bit about our other programs.
Can I just add one point? And I think the relationship we've had with the British Business Bank as commercial finance sector has been fantastic, really. But it is a complement to the commercial market, and where banks and finance providers can provide finance without taxpayer support, they should do so. At the moment, over the last 18 months, 84% of people who've applied for finance have had a yes to their requests. That's higher than many people expect. And there's over £5 billion a month that's being lent through normal commercial terms on loan, $1 billion or so of overdrafts, invoice finance, asset-based finance as well. That's very important to businesses. But guidance is often needed, and where people feel they don't know how to go about it or where to look for the best solutions. The range of finance providers is quite big. We've got a website called Better Business Finance, which provides lots of helpful information, and I'd certainly urge people to have a look there, which can really help them with mentoring, with guidance on how to apply for a loan, and an account finder which shows the range of providers that are out there.
Well, thanks for your time today, guys. And Patrick, I believe after 10 years at the bank, you're moving on to pastures new this month. I know we may never see eye to eye on some things, however, the foundations of you've helped to lay at the British Business Bank and the help and support and guidance you've given hundreds of thousands, if not over 1 million small business owners over the years is truly appreciated. So I wish you all the best for the future, and I hope whoever replaces you follows your trend.
Yeah.
That's very kind of you to say. So, 10 years ago, the British Business Bank didn't exist. I had come into work in government for 3 years, having worked in the private sector. I got such a good role in helping to set up the bank, and then what we've achieved over the last 10 years. I thought I had to draw a line at a point. So I've done my private sector, I've done my public sector. I don't know what the third chapter holds, but as I'll always be very proud of what the British Business Bank has done. Thank you for your kind words about what we've done. I think we've provided huge support to hundreds of thousands of businesses. I know I'll have a great team behind me here at the bank, and they will take things forward. And I don't think we disagree very much. I think you're actually trying to provide information to small businesses in the same way that we are, and help them through what has been a very difficult few years.
Okay, final words from you both. If somebody is sat at home now worrying about repaying the bounce back loan, a quick sentence on what they should do.
I would really implore them to go and speak to their lenders. The lenders are there. We've given them the pay-as-you-grow options. We've given them the guarantees. We've asked them to engage and constructively work with borrowers. So please don't worry. Please work with your lender. And I think they are there. At the end of the day, you're a customer of the lending industry, and they will go and try to find a customer-centric solution for you.
I'd echo that. Talk to lenders, but many businesses can also talk to other businesses. A lot of the business associations, Federation of Small Business, the Chambers of Commerce and so on, we work with very closely. And it's helpful sometimes to talk to other business owners and listen to your website, Mike. So that's a good source of advice. I mentioned Better Business Finance a little bit earlier. Hopefully there's some useful information there too.
I'll put it up on the website. All right, thanks a lot, Patrick, and thank you, Stephen.